welcome to the closing beat, everybody. Happy Monday to you. How you doing out there? Oh, I pulled too far. I almost pulled the camera down. We are financial advisors here at Jazz Wealth. We are good with numbers, not good with the other stuff. I hope you had a great weekend there, and you got a short week, right? Thanksgiving coming up here. Just found out about that. So this week you have the stock market closed on Thursday, and it'll be a half day on Friday. Did I screw it up? I screwed it up, didn't I? I did it. I totally screwed it up, man. My bad. I didn't mean to. So Friday basically will be a kind of a ghost town there. Just real ghost town. Be very, very boring. It's only a half day, by the way. So the stock market's open till 1 o'clock. But come on. You're going to be busy. Everybody's going to be busy. You know what I mean? The stock market tends to be a real snooze fest there. While other advisors are playing checkers, we are playing chess here at Jazz Wealth. And I had a client today that I helped do what's called a 60-day rollover to raise their basis in an S-Corp so that they could take the full 80% depreciation on a piece of equipment that they bought. We did a class last Thursday, our Wine and Wealth, to go over that little pitfall that a lot of social media, actually all of social media, doesn't cover there. So we went through all of that, and I had a client go, whoa, wait a minute, talk with my accountant. That's me. I need help. Always happy to help with things like that. Last week's Wine and Wealth class was on year-end tax strategies from beginner to advanced, and the advanced stuff really opened up some eyes, apparently, because it's stuff you just don't see, but we do need to think about. The economic calendar this week is light. Very little in terms of econ news coming out. You got some retail earnings that will be reported there. NVIDIA tomorrow is going to be all the attention, really. They'll probably get the most focus. That hit a new high today, right? Yeah, that's a new all-time high, $505. So that'll be the major focus there. And the Federal Reserve is even sort of disappeared for the week. A few speeches here and there. I think tomorrow you just have the FOMC minutes coming out. Other than that, they're going to take this off and be a little bit quiet. Let's take a look at the S&P here. There we go, S&P. We got a 3-week rally here. All right, so 3 weeks in a row, gaining about 10%. Actually, that's kind of odd. You know, let's take a look. I'm going to try something real quick. I'll use the SPY so you can play along if you like. I'm going to do a rolling search here in our little research tool. 10% in 3 weeks. And let's look back 30 years. I bet we're not going to find that this is very common. 16 times over the last 30 years, actually. And let's do something interesting. Let's sort by date. Can you see it? I'm going to sort by this here. So SPY, you got a 3-week time period here in 2022. Remember the downturn in 2022. 2020 coming out of COVID there, and then the March low for COVID. That's a 3-week run. Notice how a lot of these are right around big declines. 2008 and 9, 2002, just after the dot-com bust. So these 3-week rallies tend to come what? After declines. And I put that in our notes from Jazz this weekend. We were talking about how the best gains in the market come after pullbacks. And so you can't, what are you going to do? You got to kind of be in through the pullback, or you're going to get your face ripped off on the way up. So that's great. And we know that that's kind of odd. Average performance over the next 3 weeks is only about 1.7% positive, 62% of the time. That's just taking this data and saying, hey, what does the next 3 weeks look like? And actually what we could do, no, that's good. So 3-week performance, it's kind of muted compared to, hey, I just spent 3 weeks going up 10%. But, that's what we've got going on there. Big rallies come during big declines, or after big declines, I should say. Anyways, we now have a little bit of trouble here. So if you look around the S&P, I had no life this weekend. And it's great that this is going up and I have no life there, but we now have 42% of the entire S&P in what's known as overbought territory, meaning it had a run just like this, right? It's looking good. So that becomes a little bit of trouble. The tech sector leads the way here, of course, hitting new highs there. That's the most overbought sector out of the S&P. The communication services sector is second most overbought there. On Jazz After Dark tonight, actually, we're going to look at an interesting study. Because I have no life and I spent the weekend playing with stuff, we're going to look at, hey, we know that right now, if we look at the S&P, the top 7 stocks, they run the show. They're basically all of the gains. It's actually 76% of all of the gains in the S&P this year have come from 7 different stocks, the top 7 stocks. So I said, well, I'm just curious, like, does that mean that next year they tend to do well? So if I took the top 7 stocks every single year since my birthday, 1982, and just for fun. And I was like, all right, well, let's take the top 7 stocks in that year. And then the next year, they're all different, right? We had United Healthcare in there, Berkshire Hathaway, U.S. Steel. You can go back as far as you want, see different names. I said, well, okay, let's take a look and see if in one year they lead, do the next year they fall, or do they lead? Or are they quiet? What happens? So we're literally going to do that tonight. We're going to look at each and every year, and we're going to see the leading stocks, what they do the next year, and see what that kind of does there. So a little bit of effort put in on my part there. I hope you enjoy it. That'll be at 7 o'clock here tonight. Back to the markets. All right, energy is the most oversold sector. So if you like that stuff, if you like momentum, your tech and communication services. If you like counter trend, oversold, discounted sort of, you're looking in energy and getting more attention by the day. Healthcare. A lot of healthcare stocks, if you look at that sector, a lot of them start, okay, this is a discount. I'm going to, take a shot. A lot of people taking shots there. So that's what you have going on in the S&P. Let's look at the NASDAQ here. Hey, by the way, unlike my wedding anniversary, I will not forget, today is the 2-year anniversary of the high, right? So if you go back right here, that's 2 years ago, right there, sitting at the highs there. So NASDAQ has fallen about 35%. It's since rallied more than 50% there. About right at 5% to go until it hits new highs there. Interestingly, if you look at the NASDAQ, and I'm not talking about the futures, I'm showing the futures, but of course we're talking about the NASDAQ here. The average stock is still down 6% from its highs. I don't know. I don't have the composite here somewhere. I don't have it. Anyways, the average stock is about down 6% from its highs. What's that tell you? Well, we've got 5% to go in the index. That tells you that just a handful of stocks or some small grouping of stocks are actually pushing things a little bit higher there. The big names, right? Let's try something here. If we look through, I'm going to go with NVIDIA because that's brand spanking new, right? 50% above its highs, meaning that's not the high right there. We're 50% above it, right? If you look at Broadcom, ABGO is the ticker symbol. Broadcom, 71% above highs. Vertex, even though it's pulled back here, that's your leader, 91% still for Vertex there. Diamondback Energy, of course, most recently has pulled back, but that's doing well. And O'Reilly is another one there. You have 21 names in the NASDAQ that are still within 20% of their highs, meaning they haven't participated hardly at all in this rally here. You're going to know the names. PayPal. Yeah, that don't look too good right there, huh? You're probably going to guess Lucid. You could have guessed that one, right? That's an easy one to guess there. Zoom, because they had a big pop there during COVID, of course. We all remember that. And surprisingly, Netflix still has a way to go as well. So in the NASDAQ, we certainly can get that next 5% rally that takes us officially above highs there. I'm talking about the 2-year high. But we need the rest to contribute. 20% of the NASDAQ. We need to get that going there, right? So anyways, that's what you have going on with the NASDAQ. I'll look at bonds here real quick because they're surely putting in a little bit more of a solid footing here. Remember, as bonds have gone up, interest rates have gone down. We see that in new home applications. People are going, oh, that's cool. A little bit of a discount. I'll take it. New home applications actually starting to tick up. Anything in the interest rate sensitive world doing well. And one that I'll point out is your home builders. These guys just nailed this whole pullback here. So home builders almost in lockstep with interest rates. As they come down, these go up. In other words, as the 10-year goes up, so does the home builders there. ITB is something you can use if you'd like to follow along with that. Otherwise, oil trying to guess a little bit of a bottom here. I'm not going to guess it. I'm assuming people are guessing that. I am horrible at guessing a bottom on oil, so I won't pretend to be somebody I'm not in that case there. And gold, after coming off the 200-day moving average, ever so quiet there. A little bit of a fun between gold and the dollar here just lately, so could present a little more consolidation. All right, we're going to try something a little bit fun here before we do stocks in the news. Because I have no life, I actually did some other stuff over the weekend. We looked at stocks with really popular technical patterns. Not saying that these are buys or whatever. I'm just saying these are really popular technical patterns. And so far, people are paying attention to them. Accenture is first up here. Series of highs breaking above those series of highs. To me, this is more of a watch list item because it is finding itself a little overextended there. But still, very popular patterns and a high, you know, how do you say it? Like a high amount of interest. Right? You can scour the internet and see, are people talking about that from a technical perspective or are they not? And there's all kinds of free sites that you can use, I guess, or whatever to do that. Boston Scientific is another very popular pattern here. Series of equal highs. This is as close to equal as you get on Boston Scientific. Kind of looks like AMAT in a way where the way it sort of trades choppy. It's not very clean. But nonetheless, we're sitting at newer, close to new highs here, and it has not overextended itself to get to that point. Western Digital is going to be something very similar. Actually, it's good. This is going to look bad, actually. Yeah, sorry, but you can see the series of equal highs here. I'm using a weekly chart to show that after a failed pullback there. So that gets a little attention by the technical traders. Likely be on a watch list kind of a thing there. Huntington, same thing, breaking above a high in the midst of a new uptrend and solidly trading with higher volume there. So those guys like that. If you like looking on the other side of the spectrum, you do have a handful of stocks. Go like this. Over here, draw a line. I'm not one for drawing lines too much, but you do have a handful of stocks doing things like this, right? So some people like to look at weak stocks that are coming back into favor. Right, or at least appearing that way. So you have a downtrend here where it's clearly equal or series of lower highs, lower lows, just blah, 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 falling down. And all of a sudden you get the W in Jazz Wealth, right, where it can't make a new low. That's very popular for technical traders. They like to look for that and then use this break of the downtrend as a potential opportunity there. So that one gets a little attention. I won't draw the line, but you can see the same thing, right? So SBA is going to be the same deal. Got a big downtrend here. It tried to make a new low, couldn't get it done, right smack there. And that's your first indication that maybe we're going to break the downtrend. It, of course, did. You can see all the volume in there where people were interested. And so this could, to me, it's more of like, you know, a watch list kind of a thing. Maybe it's interesting, you know, maybe not, but that's what you got. And same concept with Marriott. Downtrending here. And just reverses course. They have earnings come out. Whoa, things aren't so bad. Takes off, goes back the other direction there. So a lot of people like to look at these things as a pullback stock, right? And you're making the bet that, hey, we broke the downtrend. We're showing extra strength. We have extra volume. What are the odds that the next pullback falls apart and goes all the way to new lows? I mean, there's a chance, right? But that's what trading and investing is. You're taking a chance. It's a risk. But the assumption there is that it will not do that. So as it pulls back, people believe, hey, maybe that's a buying opportunity unless it falls apart. And Celanese is the other one here. Just same thing. About a series of equal highs, breaking out of a short-term downtrend there with a little bit of excitement. So I thought I'd try something different today and go through some of that. They are not recommendations. I'm not allowed to make recommendations, but I am allowed to point out things that are very popular that people like to look at, and or we can tell that they're already participating in there. So there you go. All right, couple stocks in the news here, and we'll take your questions. Let you get ready for your turkey day. We'll be here tomorrow too, but just saying. Freeport, this was, so every weekend, Barron's does a whole thing. They usually pick a handful of stocks, they overview them, talk about them, and then give some of their thoughts on that. They said basically lots of nice things, rosy comments and stuff, because of copper prices. Right? So if you notice, copper prices are going up there. So they said, well, that's going to be helpful for them. Most notably, you probably saw Microsoft leading the way. It was the leader today in the S&P in terms of contribution to the points gained. But if you look at Microsoft, what happened over, what was it, Friday after the close, OpenAI, they're like, hey, man, CEO, yeah, you're going to go. We're going to let you go. He leaves. A lot of employees go with him. Apparently, a whole lot more have threatened to go as well. Microsoft gives him a call and says, you can come over with us. And that's what they've done. So him and a big team have gone over to Microsoft and potentially an even bigger team. I just think it's funny how emotional people are that program AI, which is not emotional, right? You know how, like, when you're like, I don't know, if you're a dentist, you're used to seeing people with teeth problems, and so it doesn't impress you anymore. You're just like, whatever, do what you got to do, brush your teeth, darn it, you know. Otherwise I'm gonna keep filling cavities. So you'd figure like developers in the AI space are just like have lost a lot of that connection to emotion because their job is just numbers in, numbers out. Billion. It's a smaller. What's this thing? There you go. It did that on the Wine and Wealth too. It's back. Yeah, it's this guy right here. There's a click in its get along. It's good, right? Sounds great. Sounds amazing. While we're doing that, I will pull up your questions here and answer your questions because that is, well, all I was saying was there was a lot of like smaller biotech stuff with some FDA news and upgrades, downgrades. I just don't find that very interesting. You know, my eyes gloss over. Maybe like some of you guys in the retirement planning stuff, you're like, Dustin, just do it, man. You do it. I don't want to know about it. But I find it sort of boring, so I don't follow up with that there. All right, let's see what questions you might have there. Yeah, sorry. On our Thursday class, it did the same thing. I think it's right here. Just a little loose screw. No, it's like me. It's got a loose screw somewhere. Oh, guess the Dow winner. That's right. You in? Yeah. What? Hold on a second. I need to press the button. Cody, tell us who won Guess the Dow.
Dean K. Did you go to Just Audio? You sent. You did.
Well, that's your Publix bag there. There you go. Looking good, man. Dean K was the winner. 34,890. Even. Okay. And if you want to play, go to jazzwealth.com/guess the Dow. It's been a pleasure. All right. Let's go back over here where you're not getting sick from looking at that. CNBC said today that we hit the gains we usually get in the whole fourth quarter under 1 month. Is that why the end of day pullback? Yeah, you can. Well, that's what they chose to say and kind of point out today. But you could look and come up with all kinds of great things to say there. For example, in the last 3 weeks, we've had a bigger rally in 3 weeks than the S&P tends to give you all year long. It's not really fair to say it that way, but if you want to segment data, you can actually say that. It's just a fun way of taking some number and going, hey, that's usually all we do in a whole month or a whole quarter. So it's just something to talk about in an otherwise slow week. There's Dean. Dean's the winner there. I like it. Yeah. Sir, yeah, at least you're listening. You know when the mic gets cut off. Stock market technically is finding itself overbought here. 42% of all stocks inside of it are overbought. And it's not really meaningful yet. I was going to show that chart that I normally do where we track the number of stocks overbought versus oversold. We're getting back to that an extreme level. So if this continues tomorrow, we'll do that. We'll pop that chart in there and see what we can do there. Lucas likes Alibaba for a swing trade. Okay. Why? Would be the answer there. You want to get back over $100. So getting over $100 is like, it's not, I'm not to say it's the easy part, but that's the part you don't have to really bother with. If you buy the stock and it goes over 100, you didn't do anything. You just owned it while it went over 100. I think the challenging part here and the more strategic part is what price am I going to pay for then I believe at that point it's going to start moving and go to $100. I don't think this is your price, man. I just think it's a tough one to bet that it's just going to turn around right there. So for me, a little bit watch list type item, but a little bit cautious there. Walmart pulled, yes, sure did. Walmart with this was from last week with their earnings report there. So big pullback on Walmart there. Do you think this pullback is buyable? I'll say it's investable. I don't know that it's buyable because in the short term, I want you to think of it like this. You climbed up a bunch of stairs, and you went up to the first story, the second story, third, fourth, fifth, sixth, seventh story, and then you accidentally tripped and fell down 4 stories, 3 stories, something like that, right? You're not getting up from that right away. You know what I mean? You're probably going to call for help. You're going to dust yourself off and maybe break a bone or two. That's what Walmart did. It had fallen off of a 3-story, ledge or whatever. If you fall off of a 1-story ledge, 2-story ledge, or off the curb, you can recover quickly. And that's exactly how the sort of psychology of that goes. But investable, not. Do you think Advance Auto stocks will go higher with the new CEO? I believe they were one of the worst perform. Yeah, they are. It's got to be. They were one of the worst performers there. A little bump, but not a whole lot in terms of anything there. You like discounts. I know you do, right? So you look at a stock like this and you go, it's worth more than $53. Like, we both know it's worth more than that. You can look it up left, down, and right, up all financials. You go, yeah, it's worth more, right? But is it the timing to put your money to work in it? That's the part I don't know, and I'm not good at that. So to look at something like this and say, I think it's worth $70. Let's just say that's the number we came up with. We do our own fundamental analysis and we go, yeah, $70. But is it $70 now? Like, if I put money to work, is it just going to sit sideways for 3 months and then I got to tell people while things are going sideways? I don't know. I'm sorry. Hang out with me. It's going sideways. I know. Or is there maybe a better time? Even if you had to pay $58, $59, is there a better time to say, okay, it looks like everybody's jumping on this bandwagon? It's kind of how I would look at it. Thoughts on predictions for earnings tomorrow? So I'm a bit of a contrarian. I look at something like that, I say, it better be awesome earnings. It better be way ahead of everything expected. They better be guiding forward for some of the strongest sales we've ever seen, despite what they're having to deal with China, which I know they've already talked about. But it better be good, because you have everybody, literally everybody right here has a profit. Give them one reason to even just take some of their profits times millions, and you have a recipe for a stock that can just pull back, right? Not because it's bad and it's a horrible stock, none of that, but because everybody has a profit. Give them even the slightest reason to take profits, and you've got a lot of pressure to fight there. So that's what I worry about on NVIDIA, and that would be my prediction there. Opinion on SoFi CEO, been buying and bouncing out. You like that SoFi, man. You're all over it. They said, where's the puppy? He's like gnawing on my foot right now. What you doing down there? Smells that food on my foot. I must have stepped on something. If you look at SoFi here, this is the same thing. I'm going to just keep riding this with you here, right? I can't believe that this is the moment to buy. You know what I mean? Can't do it. Right in the middle, or working towards the bottom end of a downtrend. I can't get on board with that, man. I want to be with you. I like the company. I like what they're doing. They're headed in the right direction, but can't do it. And the puppy's over there now. He's gone. Speaking of gone, I'll do the same thing. Remember, tonight, Jazz After Dark, if you want to come hang out, we're going to do a fun study on the top 7 stocks that are leading the market this year, as well as the top 7 stocks every single year, to see if we should be focused on the momentum that is amazing right now in those top 7 stocks. Everybody else, have a great rest of your evening. We'll see you back here again tomorrow, and thank you so much for watching. Adios.